Well, hi folks, let's look at natural gas very quickly. Just a couple minute update because not much has happened since the weekend. So there was the rollover gap. A few hours later, a couple of 4-hour candles later, we just dropped down and we closed the weekend with that sort of spike high reversal. Could call it a sort of a hammer bottom candle. And then just the last 4 hours since the weekend, just sort of moving sideways. Holding up a little bit on this 4-hour chart. This is the NYMEX 4-hour chart, and just holding above the 50-period moving average, but not really doing much. I'd like to see this probably test this 20-period moving average one more time. That's this green line on the 4-hour. Come back into this zone a wee bit, probably down to $2.38, maybe $2.35, and then start to look to edge back into a long position, perhaps with a quarter size position at, let's say, $2.35 to $2.39, somewhere around there. It is Memorial Day weekend, so it's Monday now, so it's a holiday in the US, so it's not going to affect this market too much, but it will have an overall slowing down effect on the markets. Probably not a lot happening today, and no real news coming out today. And then just going into the rest of the week, we'll get some more economic news from various sectors. Of course, we've got the NFP on Friday, the normal jobs report on Thursday, and a few other things coming out during the week. And although those don't directly affect the price of natural gas, they do affect the sentiment of the market and the Fed and the stock markets and gold and other commodities. So all of those play a role in natural gas, of course, because it's a tradable instrument. It's part of the overall market and it plays a role and it fits into all the rest of the other things. So we'll probably see a bit more movement as the week goes on. But if we do get a low volume sort of drop into that 235 to 239, I'll probably take another long position, probably only 25%, a little toe test into this market yet again. I'm not sure if we're going to see a lot of movement throughout this coming summer, but this is the 4-hour chart, the shorter term chart. Let's have a look at the day chart and see if there's anything exciting. And really, what a boring chart. We can go all the way back to beginning of the year, sort of late January, beginning of February. Apart from that little spurt up to $3, we've been trading between basically $2 and $2.60 for most of this year so far, and it's already June, just about. In a couple of days time it'll be June, so very, very dull market. I suspect we might trade between $2 and $3 until the end of the year, as I've said before multiple times, and then perhaps eventually at the beginning of the winter, towards the end of the year, we'll start to test the $3, 40, 50, 60 or 75 region up here in this pink level. But so far, not much going on. And I think it's possible that we could actually retest $2 again. And it could even be possible that if we see complacency seeping into this market, lack of interest and boredom and all of those good things which drive markets one way or the other, we could see another retest of $2 and perhaps even a test below that at $1.80 or $1.50. I don't know if that's going to happen, but we're in danger of that occurring if this market doesn't get a firecracker lit underneath it and people start to get bored. People like me, and perhaps you as well, holding long positions, start to just lose interest and get out of those longs and let the market just begin to slip down, and perhaps there'll be bears and sellers looking to take advantage of that, push the market down through that $2, $1.80, perhaps down to $1.50 level, and that's where we could probably pick up some real liquidity and some real buying interest to get this market moving again towards the end of the year and into winter for a nice rally up to 350, 360, 375, something like that. I really don't know, but I think it's worth nibbling at around about $2.35, something like that, perhaps with a quarter size position like I'm going to consider, and then again looking to add perhaps at about $2.10, maybe $2, and then with a bit of luck, actually, we could get some cheaper prices for natural gas below $2, $1.80, $1.50, and try and see the market like any other thing that you might be buying. The cheaper it is, the better it is to buy. So if we can get below $2 and get really low prices, that'll be an excellent buying opportunity for natural gas for a rally towards the end of the year. I also forgot to add that complacency can affect the market in the opposite direction too. That's why I'm taking a little nibble at sort of more or less around about the current price, because complacency at these low levels could also drive the market higher. So we need to be aware that this could happen in both directions, not just downwards, but also upward. That's why it's worth taking a little nibble. Sorry about the add-ons, but I had to get that in. And if you're new to the channel, consider subscribing. Take care. Have a great trading week.